Hey guys, welcome back to the channel. Now in today's video, we are looking at ticker symbol NVDA, the one, the only Nvidia or Nvidia, however you say it. But guys, this stock is up so much. You know, it's historically beating the S&P 500, the Dow Jones, the NASDAQ. This past week, we've seen so much buying pressure. So we are going to be looking at, is this thing going to sustain? We are going to be looking at some indicators, as well as, is this stock going to hit at $2,000, $3,000 a share in the future? So I hope you guys all enjoy it. Like, subscribe, and I appreciate every single one of you for hanging out with me. And if you guys want to learn more about investing and trading in the market, I highly recommend going on and checking out my amazing swing trading school, the Swing Trading Masterclass, where you guys can learn strategies and techniques for finding stocks with opportunity and finding undervalued stocks. Guys, it's absolutely fantastic. We have private live streams, quizzes, lectures. It's great. We have group chat. It's awesome. Code YouTube, all caps, to get 20% off. So I'll see you guys in there. But guys, let's jump into this here. So looking at ticker symbol NVDA, what do you guys notice about this chart, right? You guys, as we zoom out, you guys can see this stock has gone from about $108 all the way up to over $1,000 in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 months. So a little under a year, this stock has 10x, which is a crazy thing to see for a company, beating the S&P 500, the Dow Jones, the NASDAQ, all those really good indexes. But recently, what we've seen out of Nvidia or Nvidia, you guys will notice this stock in the matter of a couple of pretty much hours shot up 7% and then continued to rally up even more. It's up 13% in 2 days. In 2 days. So is this thing going to sustain, or are we going to get sell off? So one of the indicators that I use is the RSI lines. The RSI pretty much stands for the relative strength index. It pretty much determines if a stock's overvalued or undervalued. It pretty much tracks momentum in the company here. So what I want to look at right now it's trading for an 83 on the RSI. Let's go back and look at the previous points that it was trading for an 83 on the RSI. So as we zoom out, a point was right here where the stock went from about 950 all the way to 840. So you guys can see we had some sell-off. As we continue to zoom back, you guys can see it dipped down even here. Went from 739 all the way down to 650. A little bit in here. Little bit in here. So this indicator, what we look for, and what we're doing is just looking at previous points of contact with the $83. Now, I do think, at least for most, for every stock, what goes up often goes down. There's no such thing as a stock that goes up forever. Now, the issue is it's hard to judge. It's very hard to judge. Is this stock gonna squeeze up to $2,000? Because I wouldn't be surprised if it does. It's gonna take some time, but I wouldn't be surprised. And the reason why I say that is just because looking back at previous history, you guys can see that this thing is on a non-stop roar going up. I just think that you have to understand that the amount of money that's going to have to get pushed into Nvidia to get this stock going higher is going to be absurd. Right now, the company has about $300 million in cash, which is so much money to continue to, grow the business, invest into things. The market cap is larger than the GDP of Russia, and so it's a very, very large company. I do think getting sell-off is a very healthy thing for Nvidia to see. Do I think we're going to see this thing go from $1,000 to $20? No, but I do think a little bit of a dip down, possibly down to some moving average lines, or a little undervalued point on the RSI, maybe down to like a 40, would be a very, very normal and healthy thing for this stock to do. I just know often what goes up often goes back down. If you look at companies like Apple, Google, all these huge companies that have been around for a long time, they go up, but they often go down. And I think you need to understand that right now, if you guys are buying Nvidia, you're going to be paying an all-time best price for this stock. So a good strategy that I would recommend if you want shares or looking to get into Nvidia is to dollar cost average. Dollar cost averaging is investing consistently into the company. The great thing about it is if that's just say Nvidia stock sells off and it goes from $1,000 to $750, now you can continue to invest and buy those dips. So as it falls down even more and more and more, your average cost gets lower. So once it recovers, you make a lot more money. It's a great way to invest and still have a defense in your portfolio rather than just dumping a bunch of money in on it and then having it tank down. It's a great way to have a little defense for your investments. But guys, another indicator I want to show you guys here is this indicator by Moomoo. You guys can see that right now it is a little bit on the bearish side. So we'll see what happens with this though, because this is normally pretty right about it's pretty right, but also the average analyst right now is rating it a strong buy with the average analyst price target at about $1,166 a share. So we'll see what happens, because from its current price, that's another return of about 10%. So let me know down below if you guys are buying it. I think the strategy that I would do and that I am doing is dollar cost averaging. I just think it's a better way to invest. But let me know down below if you guys are buying it. This is a crazy stock, and I expect a lot of growth out of this and possibly a little bit of some sell-off here for a short term, and then seeing some buying pressure kick back in. So we'll see you guys later. Like, subscribe, and we'll see you guys in the next one. Take care.